On Friday, 10th March 2023, Silicon Valley Bank, a lender to some of the biggest names in the technology world, became the largest bank to fail since the 2008 financial crisis. The move has put nearly $175 billion in customer deposits under the control of Federal Deposit Insurance Corporation. Let's decode all related facts in this video. The bank bought huge amount of bonds more than a year ago and kept only a small amount of deposits on hand and invested the rest with the hope of earning a return, which worked well until the Federal Reserve began raising interest rates to cool inflation, and on the other hand, startup funding dried up, putting pressure on clients who then began to withdraw their money, and to pay them the bank was forced to sell off some of its investments at a much lower value than what it had to pay to purchase them. The Department of Financial Protection and Innovation shut down the bank on Friday, less than 2 days after the bank tried to convince clients not to pull their money over concerns it was running low on available cash, and has appointed Federal Deposit Insurance Corporation as the receiver and created a new bank called National Bank of Santa Clara to hold the deposits and other assets of the failed entity. Though the bank is small in comparison to some of the largest banks of the world, but the fail has badly affected the stock market, with shares of some of the banks going down by more than 20% on Friday. Some startups whose funds are frozen at the bank are turning to loans to meet their demands. The bank provided banking services to nearly half of venture capital-backed technology and life science companies, according to its website. The Silicon Valley Bank saga marks the second biggest US commercial bank failure since the 2008 financial crisis. The failure of Washington Mutual, along with other major investment banks such as Lehman Brothers and Bear Stearns, led to a system-wide banking crisis, and many other small banks and mid-sized regional bank entities failed as a result. Several economists and other market strategists have pointed out that the collapse of Silicon Valley Bank will not have any effect on the Indian banks, as the Indian banking system is more insulated and regulated under the supervision of Reserve Bank of India. So, this was all in this video. Hope you liked the video. If so, then hit the like button, share the video and subscribe the channel for more such interesting videos, and do comment if any topic you want video on. Thank you.